Hey everyone, welcome back to Crypto Cash. Thank you so much for joining me here. Happy Saturday to you and your family. Hope you're doing very, very well. We're taking another look here at Bitcoin, helping understand what's going to happen this weekend. While it seems fairly obvious, we want to kind of double check a few things. Okay, so if you're new to the channel, just know I love teaching people to trade. This is my favorite thing to do in all of my life, and I can tell you that it's a really awesome experience to be rewarded with certain community members that are, excelling. Obviously, there's a lot of trial and error, and it takes a while to figure out. But if you want to become a better trader, just know cryptocash.tech is the website. Link down below, and we can essentially check that out. You can obviously become a member here and effectively just join the community. It's a really, really awesome experience. Cryptocash.tech, again, is the site for that. Bear in mind, too, we also have affiliations with ByBit. We also have an affiliation with Bitget, as well as MEXC Global. A lot of them provide benefit to our communities. MEXC Global, for example, US citizens can register without a VPN and use leverage. That's very uncommon nowadays. Bitget is my favorite exchange, of course, because they just have a simple, ease of use, really awesome exchange, and ByBit works seamlessly with my Cornix trades where I send out automated trading signals to my community. FYI, by the way, too, we are also offering a trial period right now for the moment, currently 14 days for the signals, if you want to check that out and see if you like it. We will be adjusting that probably to 7 days here soon, but for now, it's at 14, so I hope you enjoy. Checking out Bitcoin, what we're going to do is look at a few things, of course. Again, start with the big picture, work our way down. I know I kind of reiterated this recently, a couple days ago, but I'd like to kind of touch on it once more so you understand generally where we're at. Because we are currently under the 50-day simple moving average on the monthly. Okay, now that's one of those moving averages where we haven't had a tremendous amount of data. If you look back, actually, previous time frames for basically ever since its inception, for lack of better terms, back here and closer to 2011, that's when it started being tracked here on Bitstamp. You can see that the 50-day SMA has only been tested one time previously when COVID occurred, right? Back in March of 2020. Now we've been underneath that for some time. 1, 2, 3, 4, 5, 6, 7, 8 months now, essentially testing that level multiple times. So keep in mind, now that we're below that, it could take a little while to average itself out, and we could very well see the rest of this year in the range of 15 as a low estimate to 25,000. That's very much a possibility. Okay, so just be mindful of that. We can also see the RSI as well, another circumstance where we've rarely dipped below 50 on the RSI, and we can see that we've been underneath that for a very long time. So while it's less common for it to occur, the longest occurrence it's happened is a full-on a little over a year back there, and that was once again back in 2015. Okay. Now again, the 4-year cycle isn't exact, but it's fairly telling on what could happen here soon. So once we get over specific moving averages on the smaller time frames, then we might have a better shot of going places. All right. So again, that's where we're at, generally speaking, right there. All right, so on the monthly, we're still bearish for lack of better terms. All right, let's take a look at the weekly, see what it tells us. Roughly the same thing. We have a death cross forming here on the weekly, and while death cross doesn't necessarily mean the price is just going to drop like a rock, it does imply that that 50-day SMA is going to work as a potential resistance, and it could push the price action down. It's going to take a lot of volume to break through 25,000. It's exactly right where the price action is kind of coming to a head. We saw a couple months last year in August, or a couple weeks rather, where the price action couldn't get past that. I mean, it was basically a full month of price action retesting that level and got rejected. We're back up there again, but as you can see, it kind of failed a little bit, but mainly because we had a lot of profits to be taken in this range. Good news is we got a lot of volume at the 21,000 range, so we are in pretty good shape here to be able to see some support moving forward. I feel 21,000, that range between 19.8, where that CMA gap needs to get filled, and 21,000 is a very strong support level. So I think that'll continue to hold moving forward. Okay, so again, just some little things kind of put in your back pocket to understand that, hey, generally speaking, we're not in terrible shape, but we're not bullish whatsoever. Okay, again, if I ever say that I'm feeling bullish on Bitcoin, it's mostly just short term. You'll know when it's long-term bullish. My signals will change. The whole format is going to change. For right now, it's survival mode, and we got to act like bears, right? And we got to hibernate and kind of wait for the right time. All right, so that's kind of where we're at there. One last thing to touch on is that we are over 50 on the RSI on the weekly. I do like this. While the volume is, we're having less volume in the last week or two, we can still see that the price action is averaging itself out. Okay, so again, for the most part, we have a tentative support there, but also a resistance, right? Support at 21K, resistance at 25K. So once again, range bound between 21 and 25 seems very likely. Moving forward on the daily, let's go ahead and take a quick look here and see what's going on. So when it comes to the daily, this is, again, something that I hold a lot of value in because I feel like the 4-hour and the daily are the most telling. Again, larger time frames, the most impactful, right? But we've already disseminated that we're kind of range bound. But what does that mean? Well, at this point here, if we are range bound between 21 and 25,000, hypothetically, we're approaching that support zone. Okay, now I sent out an update to my community here recently, letting them know that, hey, we are in a situation where the price will very likely continue to retrace, but we should experience some kind of support in this range. The reason why I feel that way is just because there's a lot of volume in this range, but also there's also a lot of support. And what I mean by that too is if you take a look at support, you can see right here, this previous resistance should be working as a support level. This previous support level should also work as a support, okay? So again, once more, the price action, we got two little ranges here, right in between, just say round number 19,800, because that's where the CMA gap would be filled, as well as 21,500. So round numbers, even rounder, 20,000 to 21,500. Right in that range, I feel like we're going to see a lot of support. So will the price continue lower? It's a stronger probability. We are stuck under 50 on the RSI right now. And even though the volume is starting to average itself out, for the most part, the price is effectively holding underneath that level. Okay, so it really just implies that we could see further downside while this oscillator is also reaching its, a pretty high capacity there, and we've seen a pretty strong shift in momentum. That doesn't mean it's just going to stop instantly. I do feel the next couple of weeks we're going to see some grain action, but I wouldn't say it's going to be super strong. All right, it's mostly just going to be averaging itself out sideways and down for a little bit longer, and then likely moving itself upwards. Okay, that's my speculation. I think we're going to see range bound here, possibly drop into this little area, and then continue to work itself up from there. It would make sense that we're going to establish a higher low here and continue further upwards. Okay. Once again, that's just my speculation. I could be totally off. I've been wrong in the past, but for the most part, you can kind of see these patterns forming, right? And that's what technical analysis is. We cannot foresee any fundamental data, which is definitely something that factors in. But on the same accord, from a technical standpoint, we are more likely to drop further from here before we see an increase. But I don't think the drop is going to be super significant because the price action held very strong right here in this range. In fact, we take a look at the volume. While it is dissipating, of course, because this is a weekend. Right here, we saw a lot of support in this range when the price came down to the previous resistance level, turned new support. Okay, so again, right there at 21,300 is a close approximate. I think we're going to see a lot of support. We are already experiencing a lot of support at the 21.5, 21.6 range, but again, the price drops a little lower. We'll start seeing more volume increasing at that level, and that'll tell us a lot more. Okay, for now, we're looking pretty decent here on the 4-hour. We do have a MACD convergence on the horizon, and this is telling us that we could very well see the price action continue further upwards from here. We've also been plateaued or basically averaging ourselves out right at 30 for a long time. And for the most part, if you look at its history, when Bitcoin comes closer to 30, it will typically average itself out upwards. Now, we had this really strange time here in December where the price just went sideways and was kind of stuck on stupid. That's the term I like to use to describe it. And we didn't really see a strong bounce off of 30 on the RSI. However, we see this other one here. The price action increased. That may not seem like a lot, but there was a small margin here of a good 5% after the fact. Okay, so again, just because that happened doesn't mean it's going to happen again. But generally speaking, when you see the price action come down to 30, you can expect it to either go sideways and or up from there. If the RSI stays at 30 for just say the next week and the price doesn't go up any higher, then we should expect further downside. Okay, it's going to basically be working as a resistance instead of a support and effectively continue to push that progression downwards. But for right now, MACD converging, we have potential for upside this weekend and or early next week. Again, I say upside, that's minimal upside. Okay, we're talking maybe 22,000 probably at best, perhaps even just say a stretch here where the price comes up, establishes a lower high, comes back down, gets rejected off this trend line. It would put us right at about the 22,300 mark, which is why our second profit target for our long position on Bitcoin is at 22,200. Okay, we're working within the Fibonacci retracement levels. You got to give it time to allow itself to happen. Okay, so again, using small position sizes, we can wait these storms out, right? That's the whole point. Again, it's okay. Some people are getting rich right now, and that's absolutely a thing. But the conservative approach is to survive the bear market, and if you are thriving, good for you. I hope that is the case. But it's more so survival in my personal opinion. And when we're all kind of banding together and working together towards a common goal, I think it's important to be patient too. Okay. So again, if you play your cards right, eventually you'll be just fine. But to me, I think being conservative and safe right now is the best way to go. Either way, that being said, taking a look at the hour, let's go and wrap this up. See on TD sequential, we've hit a couple of 9s here. So again, we hit this 9 previously. Price kind of bounces and rejects off of this 21,900 range. and you can see somewhat of a solid shelf there. So 21.9 will be the most immediate resistance level. If we can break above that and use that as a support, then I absolutely think 22,300 is doable. Okay, so between now and whenever that is, it's important to remain patient and to not try to take any trades that you see because it seems like a good value. While we are approaching support, there's no guarantees that it will hold, but on the same accord, it should, right? So statistically, we have a probability of the price not going much lower. Once again, that doesn't necessarily matter because the market movers have a lot more money than we do, and we just kind of got to roll with their punches. That said, on the hourly, we are not overextended by any stretch here. If we take a quick look at the Ichimoku Cloud, we can see we're still trending below. So, depending on how your trading style is right now, unless you choose to take multiple entry targets and you average price down as the price comes lower, which we're doing, then there would be no reason to take a long position right now. Now, when I say average your price down, basically you put a small percentage of your overall portfolio in the trade right now, hypothetically. If the price comes down lower, you add to that position a couple more times, and then of course you have a tight profit target right here in this range here of about 21.9 to 22.3. Okay, ideally you have multiple targets. Again, there's different strategies. Of course, you could short on the way down if you want, but there's no guarantee it's going to go down lower either, right? So why not go with the more certainty here of the price action averaging itself out upwards here soon, at least within reason. Okay, a small amount of increase would make sense. But here's the bottom line: the lagging span is within the price action. So if you have a short position open, you should close it. Conversion lines kind of averaging itself out pretty close to the baseline. So it really just tells us that there's not a lot of momentum in either direction. Okay, very last thing, the only thing that's really kind of holding the price action in place is this upper and lower lead. So if we can break up above, just say a closure above 22,000 or higher, then we'd have a pretty decent chance of the price action continuing further up. For right now, it just seems like the probability of the price action staying underneath that level for the remaining foreseeable couple of days seems very likely. Okay, so I wouldn't expect a very significant push in either direction from Bitcoin until obviously we break through some of those resistance zones. So for me right now, the best trade is no trade. And if you are going to take a trade, average yourself down because the price could continue lower. If it doesn't, you get filled and you take your profits. That's how it should go. Okay, those are things that I've done throughout the years to survive these kind of markets. I'm not a super risky trader, right? So if you're looking for a 1,000% return in a couple of days, you're doing it wrong. That's just my personal opinion. But again, I teach all this into my Trading Academy. So be sure to check that out. CryptoCash.tech is the site, link down below. That's really all we have for you here today. We'll go ahead and wrap this up. Thanks again for joining me here. If you want to become a better trader, again, reference the website down below. Pretty awesome stuff. We're going to be adding some really nice market data as well. Check that out in your own time. Thanks again for your time. We'll see you in the next one. Take care.